Kitco News special coverage of Masari's annual Mainnet Summit is brought to you by Oasis Pro.
The crypto crackdown and regulatory headwinds in the U.S. are not only impeding the growth of an important nascent industry, but are also crimping innovation, dampening ingenuity, and even sending millions of good, high-paying jobs overseas. I'm at Nesto for Kitco News, reporting from the Mainnet conference here in New York City, where those sentiments and more have been made by numerous leaders in the budding crypto, blockchain, Web3 revolution, including my next guest, Paul Grewal, the Chief Legal Officer at Coinbase. Great to have you on. And so before people say I've gone off the reservation, this is basically paraphrasing a tweet that you put out earlier, if I may. Do we really want to hand over 1 million developer jobs and 3 million other high-paying jobs to overseas jurisdictions simply because we can't get our act together in the U.S.? You later quantified and said, rhetorical question, obviously we don't. Is that really happening?
It is happening. The best research we see right now is that this industry will generate millions of jobs looking ahead. And these are not theoretical jobs or jobs that may or may not happen. We know there are going to be millions of Web3 developers entering this industry and many more millions of other non-developers also looking to work in the space. My point was pretty straightforward. If these jobs are coming, and we know they are, wouldn't we want to have at least a fair share of those here in the United States? I think the answer to that is an obvious one. It's yes.
And the naysayers are going to point to a gentleman who's incarcerated now across the river and say, I've heard people say, well, enforcement should be the last step in the development chain. And so there has to be some sensitivity for the uncomfortable blow-ups that keep happening within the space, or at least certain quarters of it.
Enforcement is very important. Just as enforcement was important when Bernie Madoff and other fraudsters in the traditional securities markets did what they did, we think it's appropriate, indeed it's laudable, that the Department of Justice has gone after the scammers, the fraudsters that do target our industry. But that's no reason to throw out the entire baby with the bathwater. It's why, if you look at the G20 countries, the 20 most important economies in the world, over 83% of them have now adopted cryptocurrency regulations or frameworks or are on their way to doing so. The United States is falling behind. That's the bad news. The good news is there's still plenty of time to catch up. We have very important legislation now pending in the House of Representatives. Coinbase is supportive of the bills that are moving their way to a full House vote. The US can still get this right, but it's time for us to act.
And you guys are, speaking of act, it's almost taking action like a pack in a way. And you recently tweeted that Americans need Congress to act. You point to the outsized disappointment or dissatisfaction with crypto holders with the current process and framework. So how active is a company like Coinbase going to get to try to motivate holders, people with a vested interest, to actually achieve legislation that is, favorable and in line with your needs?
Well, Coinbase has been quite active, not only in sharing our views with the Congress and other policymakers and stakeholders, but also critically in encouraging the millions of Americans who have already engaged with cryptocurrencies to share their views. Something like 52 million Americans today have bought or sold or traded or otherwise engaged with digital assets in some form or fashion. That's many more times than have even driven an electric car or used ride-sharing services. So this is an important technology. Americans have made it clear they want this as part of their future. And unless these 52 million Americans and others share their views with their representatives, make it clear to their elected representatives that they want to see sensible, fair, balanced regulation as applied to digital assets, the United States is going to lose this opportunity. We're going to lose this moment.
How does that look if we lose this moment? I mean, you don't get it back. You don't get second chances.
I think
like this interview.
We know exactly how this will look because we've seen time and again when this country has ceded its traditional leadership role when it comes to new technologies, other countries have grabbed the mantle. For example, there's recently been a tremendous debate in the United States about semiconductors and how over the last 30 years, this industry that we developed, that we grew, somehow found its way to countries far from the United States and countries that may not always have the United States interest. Well, I don't want, and Coinbase doesn't want to find ourselves 30 years from now asking the same questions, the same kinds of questions that we're asking about semiconductors. We don't want to be asking in 30 years, who lost crypto?
I think in this room it's known, but for broadcast purposes, there's a lot of focus on crypto and Bitcoin and then the other stuff. Here, it's a trunk full of, you get into alternative investments and digital assets and blockchain and Web3, as I said in the intro. This is not necessarily this loss or potential loss of an industry is not about speculators and traders and people, flipping whatever coin they want. This is about big business and big data, if you will, and moving all kinds of manner of entities, commodities, et cetera, digitally, which nobody is against.
Well, look, trading was, I think, and has been an important early use case for digital assets and crypto, but it's just this beginning. And frankly, I think if you walk the floor here and talk to people about what excites them, what motivates them, why they are building new Web3 and digital asset technologies for the future, it goes to all sorts of use cases, all sorts of opportunities that are far more compelling, far more meaningful, frankly, to the average American and the average person than just simply buying and trading and selling these digital assets. Things like decentralized identification, the idea that we no longer have to hand over all of our personal information to these large technology companies in order to confirm who we are when we operate on the internet. Things like digital health records. There are all sorts of interesting and important applications that are emerging with digital assets and cryptocurrencies, but they need to be given time and space to take root and to grow. And that's why we think sensible regulation can play an important part.
You recently said it doesn't get more down to earth than this as far as, industries that people can get their head around. Arizona builders, we'd love to meet you.
Yes.
Close the gap there in terms of why would you tweet such a thing?
Well, in places like Arizona, places like Ohio, parts of this country that often get overlooked, we're seeing developers, builders say, I want to be part of the digital future. And they're seeing blockchain-based technologies and digital assets as a way to participate in the future of the country and the future technology that's going to allow this country to continue to flourish. And so while a lot of us tend to focus on places like New York and California, when we think of where this technology will ultimately take root, I simply wanted to remind us all that in places like Arizona and elsewhere, this is just as important, maybe even more important.
You're right. And with rising interest rates and borrowing costs high, that's a tailwind, maybe an incentive for people to, like builders in Arizona, to answer the call and listen to other ways and to get involved, I would assume.
I think that's right. I think there are all sorts of opportunities to participate in this future if our government gives us the time and space and rules that allow us to all do that.
Just as we wrap up here, I know we're on a tight schedule. Just give me your thoughts and observations in terms of kind of like what the fourth quarter, but really 2024 election year might look like. But because it sounds like you guys are really taking your message to the people and to some other industries that maybe aren't in this room at this time.
Well, the opportunity of an election year is that our leaders never pay more attention to what their constituents, indeed what their voters have to say. It's one of the reasons, Matt, we have been pushing so hard for the 52 million Americans and others who care about digital assets, who want this as part of their future, to get involved. If you go to standwithcrypto.org, you will see all sorts of easy ways to call your congressman, send an email to your senator, let them know that we all want sensible digital asset legislation passed, not in 5 years, not in 10 years, now. This is too important an industry, too important a part of our economy to wait. And so I would encourage everyone out there to do just that.
All right. Well, we'll be in touch. Thanks so much for your time.
Thank you.
Today, Paul Grewal is the Chief Legal Officer at Coinbase. For Kitco News, I'm Matt Nesto.
Kitco News special coverage of Masari's annual Mainnet Summit is brought to you by Oasis Pro.